Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week of January 20th. Title word would be range bound. Both corn and beans, the grain markets have been very much in a range bound type market. First on the corn. Trading range here of late has been between 410 and 430. Cash basis has been the talking point. It seems like there's more volatility in the cash market in the basis than there is actually in the board, as it chops back and forth in about a 20-cent type grinding range-bound market. Just a quick update on where we are for the week and for the month and some of the commodities. March corn for the week is up 9 cents, and for the month of December thus far is up 9 cents. Soybeans for the week, March beans up about a dime, and for the month, beans are only up about 1 cent. As far as wheat, here's kind of the interesting one. For the week, wheat is down 15 cents, and for the month of December is down 55 cents. So wheat's had a pretty impressive move to the downside this week based on world supplies. Also, just kind of a side note, stock market Dow Jones is up roughly 500 points this week, mainly due to the Fed talking about the beginning of tapering in the bond buyback program. Getting back to corn, though, cash continues to be the talking point. Producers, be very aware of your local basis. If you get a good basis pop because of ethanol plants or processor needs, definitely give that a look and make some sales. We're seeing free DP in the country. That's obviously a very good sign that basis levels are strong, and it should take advantage of that versus just solely looking at DP to delay any kind of decision in your selling opportunities. Cash inventories in some areas will be limited depending on cash movement. Some of that may be due to logistical problems, weather this time of year, lack of sales. So that'll be interesting to watch. But we have an inverted cash market in many parts of the Midwest where cash is worth more today than it is tomorrow, or fairly flat. This is happening at the same time you have pretty good carry in the board. So the futures market's telling us one thing, cash market's telling another thing. If you're in one of those regions where the cash market's saying sell today versus tomorrow, definitely look at that as an opportunity to make some additional sales, especially as we get into the first of the year. Especially in the western corn belt, we continue to see the farmer be very tight-fisted in holding his inventories at this point. Soybeans, we seem to be in a big hurry to go nowhere. Again, range-bound. The range is a little bigger in the soybeans than the corn, obviously, with the range over the last 4 weeks plus in the March futures between around 1310 to just around 1350. We seem to be in a big hurry to go both sides of that parameter. To this point, over that same time frame, over the last 3 weeks plus, we have not had a close below 1320. From a closing perspective, that seems like pretty good support. South American weather, touch on that in a second, is going to be a talking point, obviously, as we go through the main part of the growing season. Domestic demand, due to good crush margins and positive meal margins and meal demand, not only domestically but for exports. And obviously the world demand on exports, as we're running 97% of projections right now, just a fraction through the marketing year. Now, as we approach that critical time where the world market tends to do its switch from the northern hemisphere supply to the southern hemisphere supply, we could see some cancellations, some switches and that type of thing, but most of the time you're not going to see that as we get well into 2014. But going back to South American weather, it's going to be interesting to watch. Okay, there have been some estimates come out of South America of late, one being Brazil from Safras, estimating the Brazilian bean crop right at about 91 million metric ton. Keep in mind, 91 million metric ton is larger on its own than the U.S. crop was this past year. You throw in Argentina, Paraguay, Uruguay, and basically the continent as a whole, talking maybe up to 160, 162 million metric ton, again, depending on weather. It puts you real close to 6 billion bushel bean crop, nearly double the U.S. crop. So the reason you have this huge inversion in the market right now is the market's trading the U.S. stocks, the U.S. demand, which have been impressive as far as the demand standpoint and fairly tight. From a world perspective, January will be your low water mark on total stocks as we whittle through some of the U.S. inventory, and prior to harvest in South America, those world stocks will be right around 40 million metric ton in January. But by the end of April, those stocks will reach back somewhere above 130 million metric tons. So that is the time frame you see this major switch in the demand sector going from the northern hemisphere to the southern hemisphere. Logistics on both corn and beans are going to be key. River, low water has been an issue, especially St. Louis and south. Cold temperatures here in the early part of December were an issue. Bad combination if you're trying to run a barge program is low water and low temperatures. Now the temperatures have come back, and it looks like we're going to see some precipitation throughout a majority of the Midwest here over the next few days, not only with rain and snow, so we'll see what kind of impact that may have on water levels, but then we're going to tail off into some cooler temperatures. So logistics are going to be key. Rail, especially going to the West Coast, has been somewhat of a sticking point as far as keeping a good solid supply going to the port. So this is key because we got a lot of beans to move out yet, and domestic logistics are going to be key to make that all happen. Cattle on feed report this afternoon. Cattle on feed came in line just a little bit lighter than what the trade was looking for. We came in at 95%. Trade was looking for 95.4. The number that will catch the most talk is the placements at 97%. Trade was looking for around 101, so that'll be a little bit positive. Marketing's at 95. Trade was looking for 94.6. So cattle and feed report from a cattle perspective looks a little positive. Looking forward, two things to watch, namely over the next several weeks. 3 weeks from today is the January 10th USDA report. That will give us our final production numbers, a supply and demand update, along with the stocks report from December 1st. So a lot of key numbers there in that January 10th crop report. And also South American weather, which up till this week has been almost a non-event. Now we're starting to see that having some impact on Argentine weather and some concerns on what may occur there. But all in all, that's going to be a watching point as we go through the first 60 to maybe 90 days in 2014. We wish all the viewers out there a very Merry Christmas, and a special thank you to all of our customers for their support in 2013 and for a prosperous 2014. If you have any questions, call any of us here at the office here in Cedar Rapids. Phone number is 800-373-2525, or you can catch us on the web at BIS Commodities. With that, everyone have a Merry Christmas and a great weekend. Thank you.